Good morning, traders. It is the 23rd of April, and here's your morning market analysis. Today, we'll be talking about the DXY, WTI crude oil, gold, and Australian dollar. Let's kick off with the US dollar index. The greenback struggle to recover continues. After hitting a 3-year low at 97.91, it has barely bounced back, trading near the 98.8 range. Markets came back from Easter break with a cautious mode, but any attempt at a sustained rebound was quickly capped by political noise, and specifically, President Trump's public attacks on Fed Chair Jerome Powell and even hints at removing him has seriously shaken the confidence in the central bank's independence. And that's not just a political theater, it is a real blow to dollar's credibility in global markets. And technically, the chart is firmly bearish. RSI is sitting deep in oversold territory around 25, and MACD remains in a clear sell mode. The price is stuck below its 9, 20, and 50-day SMA, which now act as a resistance. Unless there's a strong shift in market sentiment on clarity on the Fed's position, the dollars remain vulnerable to a deeper loss, with 97.91 and 97.72 in focus. Now, turning to crude oil, WTI has been whipsawed by conflicting drivers, and early in the week, oil dipped over 2% on headlines suggesting US-Iran nuclear talks were making progress. That raised the possibility of more Iranian supply entering the market. And at the same time, a weaker dollar and uncertainty around global tariffs sparked some safe haven buying. Still, overall sentiment leans cautious, especially with US PMI data looming and potentially reinforcing the fears of an economic slowdown. And technically, oil is having trouble reclaiming key resistance around 64.18, and it is now lingering near 63, but below the 20-day moving average of 64.68. If the price can't hold above 63, downside targets at 62 and 60 start to open up. Traders are watching this range closely. Either it rebounds with volume or we test lower support zones again. So now, gold. Gold has been pulling back, but the broader trend is still intact. After surging to a new all-time high of 3,500, the metal saw some healthy profit taking, and the trigger is a combination of improving sentiment after easing signals from US-China talks and lower treasury yields. Still, with ongoing Fed uncertainty and Trump's unpredictable tariff messaging, gold's safe haven appeal isn't fading anytime soon. In fact, it is already up near 29% year to date. From a chart perspective, gold is cooling off near 3,400 after that sharp $50 drop. The RSI has pulled back from overbought extremes, but still suggests strength. As long as we hold about 3350 to 3370, bulls may eye a return to 3450 or even retest 3500 over the next few months. If we break below 3350, though a deeper retracement toward 3300 is possible, but the bigger picture still favors buyers. And lastly, Australian dollar has been riding the wave of dollar weakness. The Aussie got an extra push from risk sentiment rebounding slightly, especially as China, which is its top trading partner, stood firm in trade talks. Trump's recent comments hinting at progress in negotiations also helped take some pressure off the commodity currencies. Combine that with the broader Fed uncertainty, and you have got a setup where the Australian dollar is regaining ground steadily. And technically, the pair is holding just above 0.642, supported by the 10-day SMA. The RSI is stable around 62, indicating moderate bullish momentum. If it can push through 0.6468, which is the 200-day SMA, then 0.65 and even the 5-month high of 0.6515 become realistic upside targets. And on the flip side, a break below 0.635 would challenge the short-term uptrend. To wrap up, the markets remain highly reactive to political developments and macro signals. The dollar's fate is tightly linked to Fed's credibility, while commodities like oil and gold are caught between risk sentiment swings and supply dynamics. In the FX space, currencies like Australian dollar are thriving in this dollar weak backdrop, but as always, volatility remains the only constant. Make sure your levels are tight, your stop loss are in place, and we'll catch you on the next one. Thank you.